Hi there folks, back again with another video. I just want to show you a couple of setups, opportunities that presented uh, well, from yesterday and today actually on both the dollar yen and cable, the pound sterling dollar parities. Um, so let's start with the dollar yen pair. This is the 1 hour time frame, and we have been pretty much consolidating these last few days, pretty much around these areas right here. Pretty much the top would be somewhat around here, and then the bottom would be somewhere around this level. So yeah, the pair was pretty much ranging for a few days. Actually, last week was a sideways move, and as usual, whenever you have many days with this type of trading, you can expect a bigger move whichever direction. In this case, obviously a bullish move in the direction of the dollar. As I mentioned before on my earlier video, expecting dollar bullishness. The dollar index is breaking highs, going higher and higher. The dollar index, commercial investors, commercial speculators are very net short, and therefore the US dollar has been going up, and its euro counterpart has been pretty much the other way around. So, and plus, obviously, if you look at the daily time frame, you can see that it's been very bullish lately. I'm not gonna insert the moving averages, but as you can see, it's been very bullish and actually breaking its daily range consolidation, which would be this sideways move right here. Since January, it's been moving pretty much sideways. So, anyways, the idea was the market was protecting the 103.50 mid figure, and so we would take this low, or actually the level itself doesn't really matter in this case because they're pretty much similar, and extend the fib and enter somewhere around here, because this was obviously as you can see a good move up. So the market left a nice footprint, a nice elephant footprint, as you can see at this level. And let me try to draw this bearish candle prior to the move. I'm gonna actually, I chose the wrong line, but let me put a trend line around here. So this would be more or less the level that we could take this trade, very close to the sweet spot. Another way that we could have taken this trade would be a read on stops below these lows. So therefore we'll be expecting a bullish market. So a rate on stops here would warrant a long on with a fake break. A rate on stops, a riptide or turtle soup entry. But if you're looking at the market closely, you could obviously get an OTE, optimal trade entry, on this particular setup. So yeah, this was pretty obvious. This seems pretty obvious to me. and let's see if the target uh, has been reached. Yeah, actually it did reach the 2.0. It went further than the 2.0 extension already. In a very bullish market, as we can obviously see it. The 2.0% extension profit level has been taken out with no problem. So yeah, pretty good, pretty decent actually risk to reward ratio if we would consider the 62, around the 62 level, and if you were to place your stops, we were talking about some 31 pips for a at least 125 pips reward. So yeah, pretty. I would say a 5-to-1 risk to reward ratio. So not bad. And these are the kinds of setups that I look at. I was already involved with two other things, actually just one, but yeah, I think I had enough in my mind to um, that I had to take care of, and therefore I didn't take it. So now let's switch to cable. Um, Cable was pretty much doing some range stuff too last week. We had a few riptide fake breaks. Actually, I made some money right over here. Yeah, and it called my attention that this particular consolidation here, this particular order block, actually I was expecting it to go higher, but this order block was enough to take care of the business, of this business. Yeah, as market drove higher, everybody's thinking, okay, it's gonna finally break out of this consolidation, it's gonna go up. But if you had observed the euro dropping late last Friday, you pretty much knew that they were making like contrarian moves. So one follows the other very much, and the euro has been very bearish. Like I mentioned before, COT commercial traders are heavily long on the euro, and yeah, so lower lows were expected for this pair as well as the euro. So euro was pretty much leading the way, and one or the other leads the way. So we can pretty much say that there was an SMT divergence between the two. And if you look at the charts, there was actually an SMT divergence. Euro was making lower lows and lower highs, and in this case, the pound was making higher lows and actually higher highs. So the market was driven price to where they wanted to, and this was the order block to enter. I'm just gonna pull the line to show you guys how precise it is. The very bullish candle, and yeah, there you go. There you have your entry. I'm gonna also pull the fib. Um, um, in order for you guys to see that it went straight into sweet spot. Very nice trade. Um, we're talking about somewhat maybe 42, 43 pips if you want to place your stops above the high for some at least 170 pips. Let me just saddle in the the actual target for it. The actual target would be yeah, the 162 extension. So we could be talking about at least 165 pips. At least that, yeah, some 165, 170 pips for a 41 pip stop. That's at least 3 to 1, so, or at least 4 to 1. So pretty good risk to reward ratio here too. So yeah, these are the kinds of setups I'm looking for. And I'm, I reckon that I don't have to be very fancy. Just, do the usual ICT bread and butter stuff. Know how to read the markets. In this case, I was looking for a probable retrace towards the 170, 167 round level. As you can see, there is a nice consolidation right here where price left it very strongly south, but yeah, this little consolidation right here did the job. So yeah, yeah. So I mean, many setups popping up just to have your your confidence dialed in, have your levels dialed in, and yeah. In this case, market was defending the 50 round number, the 6650 level. They had special interest in that level, obviously, and yeah, the 66,700 level is a very I'm sorry, the 1.6700 round level is a very important level. You should have that line drawn in your charts, and if you go to weekly and monthly, you see why this level is fairly important. So yeah, have that on your charts and see why the market most probably is dropping the way it is. Yeah, so that's it for this video. Hope you guys have enjoyed, and let's all keep the good job. Later. Bye-bye.